Hello traders, hope you're all well. I'm here again with another educational video for you to help you understand how to read a chart like a professional. Um, so we are looking at the Great British Pound against the Australian dollar on a daily time frame. First and first is identifying our trend. And right here, we've identified an uptrend. So we are in an uptrend. And the second thing we do is to look for a consolidation. Yeah. So we were moving to the upside. Yeah. And we got right here. And then we pushed down. Yeah. So this push down right here, it was a profit taking. Um, so this was where they took their profit. That was why the market pushed down. Okay, so I'm on a replay mode. Yeah. So what I'll do is I will draw this horizontal line right there and leave it as so. Yeah, just to guide us. All right. So I'll just use the replay mode. Okay, so we are pushing up. So this was the area right there. So I just stopped that. Okay, so this was the area where their profit was taken. Okay, so if you are a supply and demand trader, um, this right here was a supply zone. So we have this rally, we have this base, and we have this drop. Yeah. So this is where you will be going short at that zone. Yeah. So once we tapped the supply zone, yeah, you would then go short, right? So if you go short, where would your stop loss be? Your stops are gonna be above the level, yeah. And you can see that this week right here, let me just zoom that for you. So the supply and demand traders have gone short at the touch of that level, and this was a pin bar to get you in the trade, yeah. And then a few days later, we came and they took you out, yeah, of the trade because your stops are going to be above that level. Okay, so if you're supply and demand traders, you're already out of the trade. Okay, so let's play it. Okay, and then if you are a support and resistance traders, yeah, let's say for example you went aware of this pull down from here. Yeah, you weren't aware of this, so this has not caught your eye. So by the time this happened, yeah, you are already interested in this zone, this level. Yeah. So when this happened, yeah, you will be keen to go short. Yeah, because support and return traders believe that the more they touches of a level, the the more convincing the level is. Yeah. So this is basically in a nutshell getting the more sellers in the market. Here we have this big engulfing candles. Yeah, 2 days in a row. Yeah, and we also have this pin bar. Okay, so all these are candlesticks that tells us to take the trade. Yeah, so there will be more sellers coming into the market. Yeah, so if they do, where would where would the take profit be? They will be aiming that low right there, the previous low. Yeah. So this will be the take profit, and the stop loss are going to be above that high. Yeah. And remember that um since August 2023, we've not had a break and close above this level. All right. So this is a very good level and strong level for the support and resistance traders and the supply and demand traders to take their trades off from here, from that level. All right. So let's see what happened. Okay. So if you've seen my previous videos, I always say that once they've set this low, yeah, they will know that there are short traders coming in, and they'll be aiming to take profits right at this low. Yeah. 9 out of 10 times they will hold the trades, and then by the time it gets to this low, they will quickly take it to the upside. Yeah. And worst case scenario is you would take a break even trade. You will not get your take profit. Yeah. So this is their signature. This is their trademark. Yeah. This is something that they do day in, day out. All right. So there are sellers in the market, stops above this level. All right. So let's carry on. Okay. So remember that since 2023, we've not had a break and close above the level. So if you had gone short right here, gone short right there, yeah, or even this retracement, yeah, they've come for you, they've taken you out. All right. So your stops are all taken out. Okay. And again, we then had this break above the level with this big engulfing candle. Yeah. So when we have engulfing candles, yeah, what does that tell you? If it is a breakout, it does two things. The first thing is it acts as a stop hunt. Yeah. So this is basically taking your stops out, and also it acts as a what? Um, it's a candlestick, uh, 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 a candlestick sign for you to go long. Yeah. If you're waiting for a break above the level, you got that in this candlestick, in this candle right there. The next day candle, you would have gone long. And if you do go long, where would the stop loss be? Your stops are going to be below this level. So, like I said before, they do two things. They will come and take you out. That's the first thing they do, and that has been achieved. Yeah. So they've done their first job is take the short traders out. Yeah. The next thing they need to do is to come back to take these long traders out. The ones that have entered long, they'll come and take it out. Yeah. So now, interestingly, we have this pin bar right there. Yeah. This pin bar, bearish pin bar to get sellers to go short. Yeah. And what is that candle? It's an engulfing candle, a confirmation candle. Yeah. To go short. Yeah. Again, there are more stops coming into the market above that high there. Yeah. So we are in an uptrend. Yeah. So what we want to do is we want to buy and join the trend. We do not want to sell. Yeah. So if you had gone long right here, you made the right decision, but at the wrong time. All right. So you've taken the long trade, which is, yeah, good, but you took it at the wrong time. Okay. So there are short traders coming into the market. There are more stop losses there above that level. And also there are stop losses for the ones that have gone long. Yeah. So they need to come down to take the stop of the long traders first. Yeah. So now, so once we've seen this break out of the level and close, we need to identify a demand zone that was responsible, yeah, for this push to the upside, right? So there's a demand zone right there, but this demand zone isn't good enough. Yeah, this is not a good demand zone. Why? Because we believe that there are stops losses just at that demand zone. So for the ones that have gone long, there will be stop losses below that low. So we will not take this as a demand zone, but this was a better zone. Yeah, as you can see, we had that big engulfing candle that broke out of the base. Yeah, So I will plot my demand zone as so. Okay, so that is my demand zone. Okay, so now we are waiting for the market to come down. Yeah, we want to be long. So market comes down to the demand zone, we go long, stop goes below your demand zone. Yeah, because the ones that have gone long there will be stops below this level and below that low right there. All right, so our demands, our long trade is right there. Okay, and our stop goes below the demand zone, and then your TP is basically 2 or 3 to 1. Yeah, but it will be safe to put your TP above that, above this high, knowing that there are stop losses above that high. Yeah, for sure. Yeah, for the ones that have gone short here, there'll be stops above that high. So you can aim to take profit just above that high. Okay, so let's see what happens or what happened. Okay, so we're not in the trade yet. Now, so my TP, my take profit, because we've created a new high. Okay, my TP will be above that high right there. Once we get to our demand zone. Okay, so the ones that have gone short here, yeah, and due to this pin bar and this engulfing candles, we've retraced back to that level. Yeah, so there's a retracement of the level. Yeah, and there are more stops for the long traders. Yeah, so we have three types of traders: level traders. Yeah, so the ones that are going short of the level, retracement traders, the ones that are taking this retracement trading, and breakout traders, the ones that are going long at the breakout. Yeah. So, right. So we had this retracement. More buyers have come in with this engulfing candles. All right. And we have more stops below this level. Okay. So, and then for the ones that are going short because of these big engulfing candles, there are also stop losses above that level. Okay. But this is where we want to go long at that demand zone. So I'll replay. Now we are in the demand market is now reacting off the demand zone. So this is where we want to go long. So we are long right now. Okay. Um, and our trade is active. So say take profit hits. Yeah. So if you're taking this trade, then yeah, you would have um hit your TP, your take profit. Okay. And this is where the market is at as we make this video. So GPAUD, no shorting. You look for long opportunities. Okay. So this happens over and over and over again, and this is actually happening right now as we speak. So on the lower time frame, we have this equal highs. Yeah, we've had a breakout. So on the lower time frame, you just look for a demand zone around possibly right there. Yeah. So you wait for market to come down and then you go long. All right. So this happens over and over all time frames. You just need to understand how to read your chart. All right. So this is GPAUD. Um, the template, your structure, and your manipulation. Okay. So this is our template right there. Yeah. This is our template. This level right here. That's the template. And then this is the structure that they give us. This is the manipulation. Yeah, this is the manipulation, and this is where we take our trade. All right. So I hope this is clear. Any questions, drop me a comment and I will be happy to respond. Trade safe. Bye.